Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek, and we're seeing mostly higher prices this morning in grains and cattle. Hogs are stepping back, and good to have you along. Scott, let's talk a little bit about the grain trade. First of all, a little bit of a recovery this morning. A lot of that probably just some, back and fill here and holding before the reports on Friday or tomorrow, right?
Right, I would agree, and thanks for having me. So the grains have had their beating here as of late, getting a little recovery before the report, and I think it's just alignment for that is what's most of it's going to be. I do think with that break, we've had a little bit of supply and demand kind of meet up to where they can, be in a little bit better spot where both sides can be a little, work together a little bit better, I guess. So seeing some end users try to buy some corn and look to cover some needs. And on the other hand, we're really looking in the fields this time of year, starting to count kernels and starting to count pods and decide what we have. And it's hard for a farmer to market some grain when you're not sure what you're going to have. And now you're getting a better idea of what you have to sell and what I need to look at for marketing. So fielding a lot of those questions lately about how do I start to protect some of these extra bushels I might have. And I guess you can find what you're looking for in the fields. If you're in the camp that says, hey, we had a supply trouble this year, we had too much weather problems, or if you're the other way saying we've got big corn acres, we're going to have a big crop, you can find what you're looking for. It seems like everybody's got somebody that drove somewhere and saw something. It's that time of year. And so a little bit of back and forth. We've seemed to hold at this point right now ahead of this report, see if that gives us anything to go off of, but we're still going to probably be very uncertain on what the yields are, even though we will get another estimate from the USDA here. So continued volatility and ups and downs will happen, but I like how it's given us a little break here and found a spot to sit to give us some chances to look at how we need to market against what our risks are.
Yeah, it looks like we're finding some end user demand or have gotten to a price point where we're fair. And, is it too early, though, to be lining up those feed needs?
I'm getting a little antsy. We'll say that.
Okay.
I do feel like it's too early. I thought maybe September would give me a great chance. I usually really try to look at that calendar and close my eyes and say, okay, just hold on till September, and I get that little harvest pressure right before harvest. You get a little pressure on the market, but I am getting a little antsy here, as I say, and I don't mind trying to cover some here. It's given me a nice sideways opportunity at a price that's near the lows. So I do think some of the demand can pick up at these prices here. I like covering a little bit here. I'm still going to hold out and try to cover some lower to try to add lower into that September timeframe, but it's hard for me to ignore it and say that I just don't want to do it. We've had, end users have paid for some high priced corn for a long extended period of time now. So it's hard not to try to say, I've got a nice break here that I should probably cover some. So do want to make sure we get some of that bought. And if you do see some demand really start to pick up as we're a little bit more competitive in the world and feel like we've got some chances to maybe boost some exports. We had our supply rally, and those are usually shorter lived than what a demand rally is going to be. So if you can get some demand, if that would be the thing that you need to really boost this market back up, because we're done with the supply scare. We're done talking about it. And those, like I said, are a little bit shorter lived and not as strong to stand on. That would really boost the market out. So watching that demand, seeing if US dollar would break or if China's going to show up or not.
Let's talk about cattle. We had a little correction the first part of the week, and we've been recovering since. And I don't know if that's because we've gotten some help from box beef values or there's ideas for better cash. Which is it?
I think it's going to be a little bit of both. Demand's holding on strong, stronger than expected. It's the dog days of summer, and here we still are trading 188 cash cattle in the north. Great that we're making it through. I guess this is usually a time of year that's tough to trade and tough to get a rally. You get into September and you always think I'm 2 weeks away of cleaning up this show list before it gets better, and then you just kick that can down the road. 2 weeks goes down and it's always another 2 weeks will be cleaned up. But we're entering this fall run very current. Whenever we get some numbers on the show list, packers show up and are taking them. So I think we're still seeing the leverage in the producer's hands, and that's going to be the case. We've got 2 packers out for the most part this week, 1 major, 1 minor or regional. They're buying some cattle at good prices. We've seen quite a few trade at 188. I think there's some that are close to the knife, but most of them are trying to pull off and say, we've got enough cattle. We're a month out. I'm not sure I'm really believing that story. I think it's just we're that tight on numbers. We don't have the numbers here in front of us, so it wouldn't pay for them to say jump out and try to raise some bids and try to buy cattle, because I don't think they're going to find more. It's only going to hurt the packers, so they're going to try to back up, let the show list grow, and then that's when they show up. End of August is usually a tougher time to sell cattle, but I think we're entering it in a very healthy position.
You bet. I wondered if the cattle just maybe weren't there as far as the tight numbers. Okay, so the feeder market, we had kind of a key reversal there on Monday on the futures, but I know you tell me that the cash market is starting to soften just a little bit.
It softened a little bit. We've had some pretty steamy prices here throughout the summer, and from spring to the middle of summer, it was a jag higher that you were spending for feeders. And I think if some of the empty yards were trying to make sure we've got all-time high cattle, I want to be in it if this is going to keep going, so you have a lot of buying, trying to make sure you have some cattle. But it feels like now that you've got some of them higher priced cattle with some high break evens that you're starting to be just a little bit more choosy to say, I've got a lot of money hanging out there, 9% interest in what I spent on these feeders. So trying to be a little bit more, choosy here in this tight August time frame where there's usually not quite the number of cattle that are for sale. Maybe you're electing to sit on your hands, wait for September, get some more of these feeders hitting the sale barns, getting some more options to choose from. So I think that's what I'm going to attribute this last little soften in the feeders to. Still think tight numbers are going to win over, and the feeders have been able to fight off every little break that they've had, and I still think they will. I still think higher prices are yet to come.
And hogs, a pretty ugly opening, gap lower in the October. And of course, cash and cutout values look like they've kind of maybe seasonally topped. But how far can we go down, Scott, with these big discounts?
Yeah, we've had some goofy trade there in the hogs, and severe discount on that October market. When you're looking at $21 below the August, that's getting pretty significant. And you get a little soften in the cash, and it's been a pretty easy break. But I think that this break's getting about far enough of a discount that I know that there's more numbers coming, but I think $21 is just a little bit too much. And I think it's going to have some nice, strong support around that $80 number in the October board. So I'm kind of looking at this 80, thinking that October can hold that number. It doesn't have to close the gap right away. Middle of August versus the middle of October, that's still 2 months away. A lot of news that's going to happen. So don't expect that October is just going to start closing this gap with August quick. But I do think it's going to be able to do some of it. It might take into September. Usually you get that calendar into September, and then October can start to look to close the gap. But I'm looking for it to hold here after this break. And it's been a little bit of a goofier trade as the market's breaking swift throughout the day, having a lot of trouble. And by the end of the day, it has a little boost on the end of the day for some trades. So I do think we have some algorithms in there really pushing this market around right now.
Yeah, I would agree on the algorithm trade. That is for sure. All right. Thanks for joining us. That's Scott Varilek with Kooima Kooima Varilek and Markets Now.